At no great expense to us, we were able to find one of the original Dragons survivors and success stories, and he's no stranger to our organization. They come and they make their presentation quite often, and they're quite willing to share their wealth with us. So without further ado, Jay Seabrook from Enriched Academy.
Thanks very much, Dennis. I appreciate it. Got Kevin here as well. McCarthy, do you want to introduce yourself first?
Yeah, great. Jay's going to do most of this presentation. I know a number of you, but I just thought I'd just say hi as well. Kevin McCarthy. I joined Enriched Academy about a year and a half ago. My background's actually from Ottawa. I worked in federal politics for 8 years for Jim Flaherty when he was the federal finance minister. One of the files I had was the financial literacy file, so this joining Enriched Academy was kind of a natural for me. It was something that Jim Flaherty believed a lot in, and I learned a lot working on that. It was a pretty cool job. It's nice to be back in Ottawa. For those of you that have invested in a tax-free savings account, that's one of the files I got to work on. I actually got to name the TFSA, which was kind of a cool thing to have done in Ottawa. So just wanted to say hi. We're around for the whole duration of this conference. I'm running our education division now, and I work with a lot of the career colleges here. Excited to work with you guys. I have to be honest, a year and a half ago before joining Enriched, I really didn't know about this space. When I was in Ottawa, I was lobbied by a lot of people, but I honestly didn't know about the career college space and the great work you guys do for students. So it's exciting to be partnering with so many of you, and just excited to be here. So I'll pass it back over to Jay.
I appreciate it. Yeah, and similar to Kevin, so Enriched Academy, it was newer to this space, like we really about 3.5 years ago, and we have to thank the Dystras as being, I believe, our first client in this world. And for those of you who don't know who we are, basically what we do is we take financial education, and to the very best of our ability is we try to make it easy, super easy to absorb, and even fun possibly at times, and like unintimidating. Like when we pull up the curtain on how it all works and really try to connect with people. It doesn't matter if they have massive debt, they have sort of a bad narrative when it comes to personal finance, and it's a painful topic, all the way through to people that are already doing well financially. How do you connect with that group? So that's what we do. And we've been doing this, just to tell you the story about our company and how we even started doing this. So myself and co-founder Kevin Cochran, we started teaching high school kids financial education 17 years ago. And the reason we started teaching kids, we were like in our early 20s at the time, early mid-20s when we started teaching financial education. The reason we did was because both Kevin and I came from we weren't the smartest kids. And both of us made a lot of mistakes, like most people, with money. And like most people, our family didn't have money, right? Like my family wasn't giving me an inheritance. Like I could see the writing on the wall. There wasn't going to be anything like that to look forward to. And Kevin Cochran, co-founder, he, like a lot of kids, he got a credit card as soon as he could get one, without really knowing the consequences of managing or not managing a credit card. And he went out, he got a $20,000 credit limit with his Visa card, and he bought a brand new car with that Visa card with a very low income, right? Stopped making payments, right? I was not much different. So I've had the credit card that had, that you increase the limit on it and you keep going up and you're stuck making minimum payments and you have every intention to wipe off that debt this month, or like I know I'll be able to, but then all of a sudden you're at your ceiling, and then the bank gives you the line of credit, and then that starts coming up, and you have that limit, and like next thing you know, you're living at these limits, and I have $50,000 of debt. I'm paying 20% interest on my credit card. I'm paying 8% on my line of credit. Like live that and had the pain. And the best analogy I like to use for this is like I realized young, kind of looking at the world, and is that life is like this buffet table of all this amazing stuff that you can really do, right? But back then, I remember feeling like I'm on the bread and water part of this buffet table, right? And the hard part is just knowing you're there, seeing this other world, but having no idea how to get access to it, because we didn't have any connections or anything like that, right? So the big difference maker for us was we had mentors, and the right mentor came along at the right time, and they're like, hey, try this, hey, read this, hey, do this. And then all of a sudden you start doing a few things, you get inspired, right? And then I was able to purchase my first investment property young, and then you go from there, right? And it's just because of that we got to a really good place financially later on in life. But I just can't say enough about having a mentor and getting in front of this education young or as soon as possible. So that is what drives us. We just want to get this education in front of students and inspire them when it comes to personal finances. So what happened with us is we were just doing free high school talks. We did it for years. The first time we did it, I still remember literally a kid putting their headphones on and going to sleep and drooling and stuff like that. And we weren't that good, right? And you just keep doing it, and eventually you start to see how you can connect on a few things. And I remember the turning point was when we got a call after a presentation at one of the high schools, and it was a father, and he called and he was just like, hey, I don't know what you did with my daughter today, but all of a sudden she's interested in money and she wants me to take her Christmas gifts back so she can buy investments with that money. What did you do? And more importantly, I have 2 other kids, what do they do? And it's like, if we're not at your school, they're not going to see us, right? So we're like, okay, so we should build a product. So we built a product. It was about 10 years ago now that we actually had a product outside of just us going around and doing free high school talks, right? So we saw that this show, we were fans of this show. This is the season, if you're familiar with Dragon's Den, that's the season we were on. It was 2013. Anyway, so this is us actually on Dragon's Den. So our product back then is this. It was like this DVD box. It was like 5 DVDs. There wasn't much of a future in a DVD box, as it turned out, right? So we're all online now, just so you know. But anyway, so that was our original product right here. That's Kevin. He's more the talker in our organization. Right? I'm this guy here, obviously. My best analogy for me in this picture is like the lights are on, but nobody was home. It was easily the hardest business thing I ever personally did, and I couldn't believe how nervous I was, right? And anyway, so we got through this pitch with the Dragons. People are like, oh, I want to go watch it, and I'm like, please don't. Literally, I've watched it twice. It hurts my eyes to watch that pitch. Yeah, here's what's cool. We did get through this pitch, and we actually had all 5 Dragons bid to go. We could have used Kevin O'Leary on his own, or the other 4 Dragons. At the time, the concept was creating the Dragons of tomorrow, and we didn't think many people wanted their kid to grow up to be like Kevin O'Leary, so we decided to go. We decided to go with the other 4. So I was talking to someone last night about this, but people asked about Dragon, and talking about the diligence. So Jim Treliving, it took a year to do the deal. So you do the deal on the show. We just did a royalty deal with them, but they make you do a 5-year business plan. They dissect your product. They look at your background. You don't think you're going to work with them. You're like, I guess they don't want to work with us, right? And it took a year, and then finally, all of a sudden, we signed a deal with them, right? It was kind of cool, but of 44 handshakes he did on that season, so it looked like he did the deal 44 times that season. He only actually put 3 over the line, right? Which is interesting. But great guys. This is us filming. The reason we show this picture is because this is my business partner, and if you saw him speak, he's not a tall stature guy. So people are like, wow, I thought Jim was a lot taller, right, for a living, and nope, it's just Kevin's on a box, right? So why Enriched Academy? And I know some of you in the room I'm actually curious, who here's seen some of our material? Thanks, Dykesters, for watching this again, right? Okay, cool, and we have some other supporters in the room. So my intent here is I want to take you through some of how we teach a student, right? And the first thing we do is we try to look at some of the psychology of what stops people from even wanting to learn this topic, right? Then I'm going to show you just a very quick glimpse of some of our credit education. And then I'm going to take you through an exercise that we take students through where you take stock of where you are right now. And I think hopefully it's valuable to everyone here. You can actually use something. And I'm going to give everyone here a tool. We'll send it all to you that you can use, right, that for yourself. So yeah, so that's the intent. So again, so why this need? Most of us see the need, right? You see the last week, Globe and Mail, Global News published yet another study where people fear debt as much as death now on the recent survey, right? It's crazy. But you look at half of Canadians are paycheck to paycheck. Your average income in Canada, last Stats Canada data, is $44,000. There's a lot of countries in the world, the average income is $800, $900 a year, right? We're in one of the wealthiest countries in the world. We have access to just about every country, like in everything. It's amazing, right? But still, half of us are in a state where if you didn't get paid, like we miss one paycheck, and it is like we're in trouble financially. We're on credit cards and lines of credit, right? This is more the issue if you look at trends. So go back down here, this says 35, and that's all the years up till today, basically. And this is showing what percentage of income people save, right? So if you go back to the 1980s, if I earned $100 and I was the average Canadian, I would sock about $20 into investing or saving, right? Now it's about $4. That's what's disturbing is this. It's not getting much better. This is an issue, right? So you look at debt, in consumer debt, and consumer debt's when you have credit cards, lines of credit, like store cards, that sort of debt. So your average, that kind of debt that Canadians have is $22,000, right? So that's pretty scary. And this household debt, that includes like your mortgages and everything else. So it's more this one that's really concerning. And does anyone know or have an idea what decade credit cards got invented in? Does anyone want to speculate? Good guess. Yeah, it was actually 1957. So there was no credit cards until 1957. So like, you know, like all the store cards that there are now, and like your Easy Financials, sorry to name names. You look at like payday advance companies, all of that stuff is a new invention, right? So if you look at your grandparents as an example, they did not have the ability to get into trouble financially like we have today, and it wasn't constantly thrown in their face. Everywhere you go, your first day on a lot of college, university campuses, credit card company right there without any idea of really what to do or how to manage it, right? So that is the challenge that we see, right? So you look at post-secondary school debt, 21 years ago was $9,000, including credit cards today. You're looking at about over $30,000, right? And we're big fans of this in that it's good debt, and we love this space because you're doubling people's income with a very high job placement. We think is absolutely brilliant, right? But the challenge, the bigger challenge we see is that most students, unless they get exposed to something like some financial education of some kind, they're not equipped to deal with that hole that they start themselves in. And this is what Kevin and I really saw, and what really got us more motivated as we got older and we hit our 30s, and we saw our friends who were way smarter than we were, got in way better schools than we did, that were way further behind financially. And the only reason, it wasn't because they weren't smarter, they just didn't know. They didn't know, and that's it. They just didn't get in front of it. So 84% of graduates surveyed say they wish they learned more about this in college university survey. It carries through life, and that's the issue. It affects everybody, right? There's not one student that you can think of that probably doesn't really need to learn this. Doesn't apply to them, right? Because that goes through life, your whole life. You look at this stat, 47% of divorces are caused by marriage, right? I'm kidding around. That's a Kevin Cochran joke, so I had to use by money, right? So kidding around. But it's true, like you almost don't want to make light of that because that's scary. So here's what we try to do first is, and again, just to sample some of the psychology, like, so what are some of the limiting beliefs that we try to break through, I guess, to open people up about this. So let's just go through them. So the first myth, we like to call it, is you need money to make money, right? And this sort of goes hand in hand with that feeling like, you know what, my family doesn't have money, it's not really in my genes and my DNA, like it's just not gonna be there for me, and people can just turn off right there, right? We see that a fair bit. Or, you know what, I don't need to learn this topic until I have money. And again, then maybe I can, once I actually get some money, then I'll learn this topic. That's part of it. What's interesting is that if you look at Canadians that have a household net worth of $1 million or higher, 94% of them are first generation millionaire family, right? So very few, only about 6% of wealth in Canada is actually inherited. The majority of it is earned by a household, right, in one generation, which is really interesting. So you look at another myth that we see. In the world of money is really complicated. It's intimidating, right? And we know it can be at first, right? And that's our job, is to break it down and try to make it like easier to absorb. That's what our course does. But just to look at this for a quick second, it's kind of like to us like learning a language. And if you look at like language programs out there, it's like, to us, it's actually quite a lot easier when you start going into this than it would be to learn a language. I'm trying to learn Spanish right now for the last 6 months, and man, is that hard, but at 42. But it can actually be quite simple. So we have, this is just an example of one of our, this isn't our target demographic, but we had a product called Dragon Bank for kids to teach them about money. She was someone as a 7-year-old that started using our Dragon Bank. And some of the money in the Dragon Bank would go to giving, like charity, and some of it would go to savings. So her parents with her opened up an investment account when she was 7. So what happened was this: by the time she was 13, when we interviewed her here, she had made more money that year, like this last year, from her investments than she did working all year long from allowance. Right? So she's just like, I make money when I'm in school, like my investments are making me money while I do this interview, like I make money when I sleep. It was the coolest thing, but she gets it, and what's happened is inspired her. Now she saves like as much, like she saves way more than what she used to, and she's like quite aggressively doing it, but she gets it at a young age. This is Tyson George. So this kid, we found him, and he was just an absolute, it's just like, what did you do? Kind of deal. Like, this kid's a bit of a freak, but we loved him. So we met Tyson. We were doing an event for adults on financial education, and his mom introduced us to us, and he had a business card, and his business card said Tycoon Tyson on his business card, right? So what he did is at 9 years, so he bought an investment property at 15, right? Now, so this is his first property in London, Ontario that he bought at 15 years old. Now, a lot of people look at this and are like, oh, good for him, his parents are rich and they gave him the money, right? Like, but here's what the real story is. So at 9 years old, he started buying stuff at garage sales and then selling it on Kijiji. And he specialized in phones and tech and stuff like that. He did well enough, and then he started doing part-time jobs as soon as he could, like even before it's legal, I think. And he started saving money, and he got enough money saved up that he had enough down payment for a rental property. His parents had to put the mortgage in trust until he's 18, but he bought that property. He rented it with his own money. Every dime he spends was his own money. Now he rents it cash flow. He makes $400 a month cash flow on that property. He's since bought 2 more properties. He's 17 now, right? So what's really cool, and the reason we tell this story, guys, is that it's not like he worked, like we've worked with him at Enriched. He's not like some genius kid. Like he's a normal kid that was curious, I would say, more than anything else. Like, he's definitely like a little out there for sure, but he was just really curious, and he did it. And I was like, the second time he did it, I said, how was it buying your second property? And he's like, it was so much easier. He's like, the first time it was intimidating, it was scary, there was some weird language. You're not totally comfortable, but he said, I did it, and now like the second one was way easier, and now he's just fired up and he's just doing it, right? So if a 15-year-old kid could figure this out and do it, like a lot more people have access to this kind of thing, right? So this is another myth, is investing's too risky, it's scary, right? And we get it, it is. When you kind of like hear the news and stuff like that, it can be quite intimidating. So you look at the stock market, and this is why it looks intimidating too. Like, it looks horrifying, right? So this is the stock market, your returns by year. So that was the 1929, and then you had this huge market correction or whatever in the 1930s, right? And then the market, like, it was strong in the 60s, weaker in the 70s. Then it's taken off. It's been a little more, it's bounced around, but it's been strong lately. So you look at it like this, it can be scary. And this shows you the returns every year in the market, good and bad, right? This helps clarify it. So you can see year to date, this is up till October the 1st. If you had $100 in the stock market and you owned a little piece of every stock, and there's actually a way to do that now where you buy every stock, so you're right across the board, you would be up at that date, your $100 would be $116, right? So that's what that means. So last year was down, but you can see the bad and the good. So here's what's interesting is that over 70% of the time the market is good, it's up. And if you broke it down by decade, I don't know if you guys could see that in the back, but you can see your return by decade. But if anyone was to guess, what do you think that the average return is? Looking at that, so you can see like the 1900s, your annual average return was 8%. Then it went down in the 1910s to 2.3. Like the worst decade was the 30s. You're actually negative 1%. Does anyone want to guess what the average roughly has been? Okay. Kevin, do you want to guess? He knows the answer, right? So it's actually above 8%, right? So if you look at that number, and let's just say you had like great grandparents or great or whatever grandparents that 100 years ago, they put money away for you, but it got lost. The fact that like it was in a box, there's a certificate or something, and you just like it's in the attic, and you found it today, and you found out, oh, I got $100 that was invested for me 100 years ago. What would the return be in these various things, right? Let's check it out. So let's say it was put into a bank account, right? Just a normal bank account. What would it be worth today? The $100 at 0% growth rate would be $100 if you didn't have bank fees. So it would be minus, you'd owe a whole bunch of money, right? That's the reality of it. So what if it was in a savings account, right? And I'm being incredibly generous with 1.5% on a savings account. I think the average is 0.6 in Canada, just so you know. That would be $443. That's what, hey, that's cool. You just discovered $443. That's nice, right? But the problem is you have inflation eating away at this return. So inflation, let's use 3%, just an easy number. It's roughly that in Canada. So that $100, what used to cost $100 100 years ago, would actually cost closer to $2,000, which just shows you the real risk is not learning how to make money while you sleep, while money's multiplying, right? Where you have it employed for you, where it's working for you. That's the real risk, because if you're just sitting there doing nothing, it's actually losing value every single day, right? And we see it all the time. I've seen people that have had hundreds of thousands of dollars sitting just in just a normal bank account for years. We've seen crazy stuff, right? Like at Enriched, because this is what we do. So if you put it into bonds, a reasonably safe investment, that 5% on $100 multiplying, $13,000. Now that's getting exciting. It's like, okay, you changed, you just Merry Christmas, like, or whatever, right? Like, it's exciting. Now, if you had $100 in Canadian real estate, your average return, doesn't matter what market you're in, your average return over 100 years, your growth, just on the value of your house, is about 6%, okay? So if you rented that part of your house, we love that. We teach that, right? But if you rented it, that's much higher than 6%, just so you know. It's like a really awesome investment vehicle, real estate investing. But it would have grown to $33,000 just at 6%, right? Now at 8% growing every year, your $100, does anyone want to take a guess? I would love it if someone would guess, outside of Kevin. Does anyone want to guess at what you think that $100 would have grown to at 8%? 210. Awesome guess. Oh my God, who was that? Wow, you got 219,000. Usually when we ask that, people are like, about 50,000. It looks like it, right? Because it's only a couple percent. And like you look at the last one, that's the power of compound interest, right? It's wild. We did the numbers a few times. We thought it was like broken when we first tried to do the numbers calculator. So the next myth is that the myth of making money is more important than the skill of saving and investing. I'll use some examples with you. So Will Smith, I think most of you, if you watch any TV or movies, you probably know who this guy is, right? Does anyone know what he was like? Does anyone know what his first TV thing was? Does anyone remember what it was? Yeah, Fresh Prince. Yeah, Fresh Prince. Does anyone know what he was doing before that?
MIT.
Sorry?
MIT.
MIT. A student?
Did he go to MIT?
Maybe. I don't even know. Yeah, that's cool. If you did, I'll look it up. He was actually a rapper. Like in late 1980s, back when it was cassette tapes, he sold like millions of cassette tapes, right? So for like, he had one hugely hit album, and like a lot of 18-year-olds that just all of a sudden there's massive money there, he just thought it was going to keep, the gravy train was coming forever, right? So what happened was this, is he ended up spending all the money he made, but he spent way more because he got into the lifestyle creep at this insane level, like private jets, like supercars, entourages, like ridiculous investments, like all of the stuff that you don't do, he did. He was 18, right? Like I would have done it too, right? But here's what happened is that by the time he was 18, he was actually $2.8 million in debt. He had that experience where everyone shows up and takes your stuff out front, like they drive away with all your possessions. A little embarrassing, right? And then he had to basically, like, for years on the show, Fresh Prince, he didn't get his check. The government did, right? Then he got like a little piece. And he finally got out of that. So good for him. His career just kept going, right? And he actually has a really cool YouTube video where he talks about his experience. It's great. He's a big advocate for financial education. But you look at NBA players, you may have seen this. These are some Sports Illustrated stats. So you have 6 out of 10. These guys are making, I looked at their average salary recently, like last year it was over $6 million. The challenge is you have a reasonably short career, right? And you got this ridiculous lifestyle creep and you're trying to keep up with everybody, right? So you look at NFL, so I met with the head of the CFL Player Association here, Brian Ramsey, former player, here yesterday. CFL is a client, so we teach their athletes. And I asked him, what's the average career length? And he said it's 2.9 years. He said not just for CFL, for all football, right? So these guys roll out of college, if they're lucky, like it's like 2% actually make the NHL. It's crazy. They all think they're gonna make the NFL when they roll out of those programs, right? And even if they made it, these guys are broke within 2 years, nearly 8 out of 10. It's wild. You look at 4 times more. So these Major League Baseball players, it's almost like they were better off never earning that money, right? If you look at this, they went bankrupt 4 times more than someone that's just making an average income, right? That's crazy. And here's what we see. We see people all the time. So our job as a company, this is all that we do, is financial education. That's why we've earned the right to gradually be better, getting okay at it, right? Or better all the time. And here's what we see when we dissect different situations and we try to find out what worked for different people, because that's really what we look at. And we look for inspiring stories. We'll see people on one side, like this guy here, he makes $40,000 a year, but they're really, really consistent, and they save a portion of their income, and they have a much higher, and they've learned this type of stuff, and they have a much higher net worth than the guy on the right that makes 4 times more. In the same area, he's got the same restaurants to go to, all the same temptations. And this person here, we'll ask them, hey, what would change for you? Because we have these conversations. I'm in debt, I'm stressed out, I don't know what to do, what do I do? And we say, what would change? Like, what needs to change for you making 120 to be able to get into a better place financially? You know what they always just about say, people say? I just need to earn more money. Like, if only I was making 150, right, then I would get this under control. So we see it all the time. And I'm just gonna ask the room this question. So on the latest Stats Can data, which is 2016 data on average income, which province do you think had the highest income in Canada? Sorry? I think Quebec's quite high, but no, they weren't number one. They weren't top. Anyone else guess? Alberta. Yeah, why? Oil, right? Yeah, that's why I prefaced it with 2016. Yeah, we like their latest income data isn't out yet, more recent. That was their income that year, right? As a household income, $93,000. Does anyone want to guess the same year who had the highest debt per family in Canada? Yeah, you can see where I was going with that, right? Alberta, right? So, and some people get to this point and they're just like, you know what? Forget all this. I'm just going to win the lottery at some point, right? Does anyone here know people that just like have to always play the lottery? Okay, right? Sometimes people are like, yeah, it's me. Like, so here's the thing. Like, I don't know who they surveyed when they got 20% of people said this, but there's a survey out there, data, that says 1 in 5 people said this is the best way to get there financially. Just to break it down for you, so this is on the Canadian websites on your odds of winning the lottery. And some people look at this and they're like, that's actually a pretty good chance, right? Like, so you're saying there's a chance. But here's, like, when you break it down a little deeper, you have a 1 in 2 million chance of being struck by lightning. Look it up, right? So you have a 7 times greater chance of being struck by lightning, and that's your chance of giving birth to quadruplets. Like, I have a better chance, like, honestly, than I do when that's the way I look at it, right? And here's the biggest issue that we see is that even if you won the lottery, usually if you haven't, like, the best analogy for this, is that if, like, you think about going to the gym, and, like, let's say it was your first day there and you wanted to start curling weight, and you try to do 50 pounds and you couldn't do 50 pounds, but then you're like, oh, I'm gonna step over here and hit the 150, right? And then, oh yeah, I'm gonna do that. No, it's not realistic. And it's like, if you can't manage this over here, how can you be ready to manage that over here? Manage this first, and that's why we're like, you gotta learn this as soon as possible, right? And the beauty of what this sector does, you're doubling people's income with a very high job place. You're making better lives. We have so much respect for that. We would do anything to support this industry, literally, like Enriched Academy. You'll see us at every event from here on out, right? We think this is awesome. But you got to get those people when they have that chance, because they're not going to have that chance many times in life, a lot of times, right? And so in lifestyle creep, man, it's so easy to happen. Like, we see it all the time. So we think these are both really important skills. Absolutely learn the skill of how to make money. Learn how to get promoted, right? And create a better and better lifestyle and have more ability to do things, absolutely. But really, you got to learn how to save and invest and have some output for that, right? So here's a quick sampling of our understanding credit. So that gives you a quick sampling of how we try to get into and get people motivated to actually watch us, right? This section here is in our student loan education. So we have understanding credit, just credit cards. We talk about good debt and bad debt. We look at card appreciation as an example. We look at all kinds of topics. When we get into student loans, it's a 23-minute section that really is what you need to know as a student to manage your student loan effectively. But I'll use one example. So this is real data. We had to dig with a partner of ours, TransUnion, to get this data because it doesn't exist anywhere. But what we did is we took a sample student who recently graduated from college, right? And for 5 years had a credit card. It was making regular payments. No problem for 5 years, right? He also had a student loan, and for 2 years made really good payments steadily. But then, so his credit score went all the way up to 816, but then the problem was that he lost his job, right? So when he stopped making payments, he didn't really know what the consequences were, so wasn't too stressed out. I'll get a job, then I'll start making payments again. Didn't really know, right? Here's what happened. So his credit score in 5 years built up to 816 in the first month, second month, third month, fourth month, fifth month. That fast. So it took 5 years to build this excellent credit score where you can get like low rate mortgages, you can get car loans like easy. You don't need a co-signer to rent. Like if you try to rent a condo and they get you to do a credit check, you might get rejected with now down here, right? So you look at that excellent credit score in 2 months went down to poor. And to build it back up, if he started making regular payments consistently, did a great job, it would take another 2 or 3 years to get it back even close, and it would only be about 700, right? So now everything else gets more expensive, right? This just shows you the difference between poor credit and your rates you would pay and excellent credit. This is on average. Even getting cell phones can be a problem, right, with bad credit. So the way we show it to students is that if you have a $25,000 car loan, you want to go buy a car, and you have bad credit, you're going to pay nearly $10,000 more for the same car that someone else got for much cheaper. That's where it starts to handcuff you in life. And if you had that money invested over 20 years, it's costing you that much. Look at a house, and we see this. We see people with a 10% interest rate loan on their mortgage debt, right? And if you look at a $400,000 mortgage over 25 years, it's going to cost someone $421,000 more for the same house, right? It's crazy. If you invested that money, that's what that number is. So again, so we have a good section there. Now I'm going to go through some stuff with this group, and this is really intended for you to look at yourself as well, right? Just so you can actually experience the education for yourself. So this section here, what it does is it's really taking stock of where you are today financially. Everyone's in a different place. We know that, and wherever it is perfectly okay, right? But this is the first exercise with taking stock. And we highly recommend that people check this out, including everyone here in this room, if you haven't done this before or if you're not doing this. By a raise of hands, I'm really curious, and usually it's not a lot of people, just so you know, so I'll preface it with that, because we haven't ever been taught this, typically. But who in this room tracks their net worth and you do it regularly by a raise of hands? Okay, cool, that's good. That's a high ratio. Usually it's about 5 to 8%. I'm gonna call it 15, 20% in this group. That's awesome, we got quite a few business owners here, right? So net worth, I'm gonna explain what this is, but here's what we know for sure is that you can't improve what you don't measure. This is Peter Drucker. It's so true. How do you improve something if you're not measuring it? And what a net worth tracker will do is focusing on this and looking at it will naturally cause your net worth to actually grow. The other thing is, once you create the habit of doing this, you'd be really surprised, but it's very addictive and productive for growing wealth. And lastly, it's super easy to do. The first time you do this, it takes about 20 minutes. After that, we recommend you do this monthly. I'll explain why. It takes about 5 minutes to do, right? Now, the reason we teach this, flat out, is us interviewing people. And us interviewing people that had no business being that successful financially, like where you're like, what? And they're being honest with you and being transparent, and you're like, oh my God, okay, so what did you, tell me your story. And I started tracking my net worth. Like, and we heard that enough. I started doing it back in like 2008, I think it was. We started doing it, and I have to say, this is one of the most powerful things financially I've ever done to get smarter about what's going on in my life, but secondly, where you feel a true sense of control about what's happening financially. We know a lot of people, there's a lot of stress with money, right? And there's this lack of control, or this you feel like you're out of control of the thing. If you nail down this number right here, I'm gonna show you, and you start updating it, you will get this tremendous sense of control. It's the coolest thing. So here's what these look like. And I'm going to send you, everyone in this room, this sheet so you can do this yourself, okay? So you're all going to get it. It auto-calculates for you. But what you do is you can see on the left, and I know a lot of you have done this before, so bear with me, but I'm going to break it down for those that haven't, right? So on the left-hand side, you're putting in all the things that you have that have value. So the first thing would be like a checking account, a saving account. What are your balances in there? Then any investments that you have. Even some students we work with, they'll have investing already. Their grandparents gave them something, their parents did. They opened up a Simple account, they worked for 10 years, they still have it, right? That sort of thing. So here's somebody that has investments. You look at real estate holdings, if you happen to own real estate, right? Some people, even at the student level, will. So you put in the values there, any other assets, cars, that kind of thing. On the right side, you see how it adds up. It does all the math for you. On the right, what consumer loans, credit cards, that kind of thing you have. So if you have, I got 3 credit cards, I got 1 line of credit, you just press this add item button, and just punch in the amounts, right? It'll do the math for you, like, okay, Visa card, line of credit, put the amounts in. If you have a mortgage because you own a house, right? Put that mortgage amount in right there. And then any other liabilities you have, like, you know, for students, it's maybe a loan to their parents. There's a lot of students that don't have government student loan debt, but they have debt because of school, right? Maybe it's a family member, so you put that in right here. Now, what it's gonna do, add up your assets, it's gonna add up your liabilities, and it's gonna show you what's called is your net worth, right? Does that make sense to everybody? Pretty straightforward. Now, very important is down, see in the bottom left-hand side right here? So if you click on this, it's gonna record, it's very easy, it's an Excel spreadsheet, right? So this is a standalone, they download it, the student would download it. But that's their current net worth, then your historical, then you just click to log your net worth. Now, what we recommend, and this is so simple, right? You're like, okay, this is super simple. And what we recommend is you update this every month, right? And we just carve it into our schedule to make sure it happens. But what happens is that it's gonna motivate more of the good behavior because you're gonna see your balance going up or it's going down, right? And you're gonna get inspired to do more of the good stuff. You're gonna be uninspired to do more of the wrong stuff. And you're gonna start to feel this sense of control. This is like a starting point, but guys, this on its own will change lives if you started doing this. Literally, if you started doing this right now, I promise you, it's the coolest thing to do this. And that sense of control is what we're trying to give back to people on their money, right? So, and this becomes very inspiring as well. Once you've done this for a few years, you literally get addicted to it. Everyone does that does it. So guys, please do that at home. I'm gonna make sure you all get that spreadsheet. You'll all get sent that. Okay, so here's the overriding concept. So we looked at net worth, and the one thing that we really try to teach people is this concept, which is paying yourself first. And if you wanted a visual on paying yourself first, it would look like this. So you have your income, right? And ideally you have it set up where when it goes into your bank account from where you work, right? You have a percentage automatically come out, like it's programmed, and you can do this on every online platform with banks, call it 10%, right? And then that would go into another account, okay? So that's basically how it works. And you do that first as soon as you get paid, right? Again, what we do when we study people, what we found is that people that were doing really well financially, doesn't matter what income they had, they always carved a piece out for themselves first that they put into investing and saving, right? Too many people we find pay everybody, like try to do everything else, and then they'll see what's left over. That strategy does not work too well from all of our studying and what we do, right? So here's just to show you an example. So again, the best that we ever did as a country, going back in 50 years of data for saving and investing, the best we ever did is we saved 22% of what we made, right? Last year, the number was 4%, right? So it just shows you most people are paying themselves last, right? Now, the other thing so what we recommend is this, a minimum of 10%. And we have a tool where we show exactly how much you would need to save in order to hit whatever your financial freedom, so we do different exercises with the student where they can nail this down. I'm just skipping through it for time. But what we see is that a lot of people, after they've done net worth and they start looking at themselves, they realize they're like, you know what, I gotta stop spending as much money. A lot of people will arrive at that. Okay, how do I spend less? So what do I do? So let's look at that. We're gonna take you through a couple of activities where you can actually look at this for yourself, right? So does anyone want to guess? What the largest spending areas are that people have? Yeah, housing, right? And transportation. Housing and transportation. So those are also what we find are the two largest spending mistakes, right? So this is what we would recommend. So for yourself, and there's something you could do for yourself to look at this, is that with your income, if you look at your after-tax income, ideally, you're not putting more than 10% into transportation, and you're not putting more than 30% into your housing. Now, how does Canada actually look? This is how it looks. So right now, as a country, we're putting an average of 17% into vehicles or transportation, and we're putting 36% into housing. And that leaves this for everything else, including investing, right? That's after-tax income. So what we did was this, we wanted to see, because we knew Canada, had its own way of doing things, right? If you go to the US, it's quite similar to Canada. What happens is we get, people around us rub off on us. We're very close to the States. We watch all of their TV, for years, all that kind of stuff. They rubbed off on us. They are flashy. Guess what? So are Canadians, right? If you go to Europe, what's really interesting, you find countries that are saving 15, 20% of what they make still, right? And the best example that we found was the Swiss. And we looked at how the Swiss allocate their income. And this is what we found, is that they're using only 9% of their money is going into vehicles, and they have 19% only going into housing. So they have much more compact cars, they have much less square footage, and much less flashy homes, right? So it's pretty wild. Look at the difference, this to this. Now, do you think that they're saving a lot more money? And the answer is yes. And this just shows you the last 5 years, right? That's their savings rate of income. This is ours down here, right? So it's pretty wild. Now, and again, it's overhousing. We're used to that. So it's something that we've seen consistently with people that have done really well financially without necessarily having some massive income is they underhouse themselves. It's like a very, very common theme. So what you'd want to do to approach this and just look at how you stand is this. Run an example, like let's say as a couple, you have a $10,000 monthly income. What is your rent? And then put in all your bills. What is your percentage, right? Now, in this example, if your goal is 30%, how do I spend $600 more? So that's where we get into with students. How do you actually start to reduce your spends, right? We look at things like utility bills. Like it's amazing if you look at something like a cell phone bill. Do you guys know that like in India, there's a company, a cell phone company that 4 years ago it had 0 clients. Today they have over 350 million clients. They've come in and it's like 5 cents for like a giant amount of data. It's insane. Data in cell phone plans are coming down, watch, like dramatically in the next 20 years. If you're not going back to your cell phone provider every 2 or 3 years, you are probably overpaying, right? You can probably find hundreds of dollars right there. We work with people that will cut their cable bill and they just go to Netflix, right? So there's things like, why do we have a landline? Let's get rid of it. You just do a bit of a stock and all of a sudden you found your hundreds of dollars. Like that's what will happen if you go through an activity like this. One of my favorite examples of living below their means is the person that owns this house. Does anyone know whose house that is? Warren Buffett. Yes, right, Warren Buffett. So he bought that house in 1958 when he wasn't a billionaire yet, right? And he paid $31,000. Does anyone know where Warren Buffett lives today? Same house. So he's a freakish example of this, right? But some people are like, man, if I was that rich, like I'd have like an absolute giant mansion, right, in the bridle path in Toronto, and I'd be driving 3 Lamborghinis. And we're like, that's probably why you're not that rich, right? And here's the best analogy we like to use is people that do really well financially, they're like ninjas a lot of times. If you looked at them, you don't see it. You know, you're like, what? That person has a whole bunch of, like, the amount of times we've been shocked by somebody when we sit down and learn about what they do, and it's just like, oh my God, you don't see it, and that's probably why they got there financially, right? They underdo. So, and here's our philosophy, like, if you can pinch larger bills, why not? Like, pinch pennies. We show you how to do that too. Like, we do a meticulous budget with people, right? But start with the big expenses first, because this is where literally you can start pinching hundreds every month. In some cases. The average person we work with on this in depth saves $950 a month off their spend when they do a full dissection of this stuff. It's wild, right? So cars, like housing's tougher because housing costs, right? And it's harder to change your housing situation. We get that. So you try to do some things where you can. We're not saying go out and flood the real estate market with houses and go down like half square footage, right? Necessarily. Do what you can do. But vehicles are a really simple opportunity for a lot of people to reduce spend, right? So you want to run your numbers on this and look at all your expenses. Guys, if you're over 10%, you really got to have a hard look at that, right? And has anyone here ever made a decision, like a purchasing decision, based on that thought process right there? Other than us, right? Because we did it too. And it's so easy to do this, right? Like, and we see this, but just consider that this might be one of the most expensive statements in the English language for your long-term financial future, up there with "I want a divorce," right? Like it's way up the list. And guys, so this stuff, what we do from here with a student is we go quite a lot deeper. So we actually go into budgeting and how important you have to live below not at your means. If you're ever going to get going, you got to go below, like financially, and actually get to where you can earn this passive income. And that's what we try to focus on. And guys, it's literally possible for anybody. I hate it if someone disqualifies themselves. They think I can never do this, right? You would be amazed what people are able to do if they actually focus on this, right? We try to inspire people to look at it. And guys, the problem is if all that we teach is debt elimination and how to manage credit, you don't have that kind of why, which is, okay, like, can you show people how to invest where it's accessible to them, where they get inspired now to do much better at saving and managing everything else because they can see the outcome that they're going for, right? And it's getting to that place where you can actually produce some passive income. So we really focus on that. It's later in our program, but we actually show people how to do that, right? So, but you got to start with this here. You got to live below your means. It's a key to financial freedom. If you want to eliminate debt, you got to look at it, right? And it makes your goals become reality. So this is an example of one of our many tools that students get in our online platform. If anyone wants this, I'll send this to you too. You kind of need the education with it, like the video behind it, but it's where you set goals, you start to actually track your spends. It's awesome. This changed lives if people can go through this. So I'm not sure what my time's like. Dennis? Yeah, okay, cool. So very quickly, just so you know who Enriched Academy is. So we've been in this space, as we said, for about 3.5 years. When we launched, we were new to the space, right? So I'd say one thing we've done, if you saw us 3.5 years ago, maybe, we've invested very heavily in the online. We have an online education portal. Last year we put $1 million into our online portal, about 500,000 hard dollars and about another $500,000 soft dollars into it. So we have a full education A to Z system for schools, and we have this year we'll have 13,000 career college students go through our course, right? And it's typically baked into either orientation or career strategies or job readiness. We work very closely. Something we didn't do when we launched, we didn't sit down and meticulously figure out how to integrate and roll out. We learned we have to do that, right? So it's something that we do now, and it's going really well. Just so you guys know, the last 4 months, so we track all of our stuff. You guys would you see your dashboard that you get to track your students, not their financial stuff. We don't track anything on that. It's all standalone stuff. We're not doing anything with this data. We're not representing any other product. We support a credit union. That's it, so people can check their credit score. We have no interest in supporting any other financial product. We need to be the company that pulls up the curtain on this world and shows what it really is, unbiased. That is the problem right now with financial education. If you get decent financial education, way too often it is biased, right? So we're like, we are not, all we are is an educator. That is it on financial awareness. But here's what happened. So we implemented a survey for all students completing the course. We've had 6,235 completions in the last 4 months. We're getting a 9.2 out of 10 from students, and over 72% are giving us a 10 out of 10. So it's pretty cool, and that's what does it for us, guys. It's not like literally why we do this is for when we walk into a class and we have this happen, and literally we'll have students going like this and like, oh my God, thank you. Finally, I understand this. I've already made a whole bunch of changes. Oh, like I watched this with my son. My son actually was able to learn something from this. That is what fires us up. That is literally where I'm in front of a class, and like Kev saw me last week, and I couldn't even talk because I was going to cry in front of the whole class. But that is our why. We're trying to get this education to everybody that we can, and the people that most inspire us with this are people that felt hopeless before they got this education. That's what does it for us, right? So that's a look at our online dashboard. So we integrate into learning platforms and into courses, right? And it's very individual with each school and each program we work with. But we have a really excellent rollout team. We've gotten so much better at this, guys, than we were initially. Like we just didn't know, right? So, and we've learned it now. So the online course looks like this. If someone clicked there, basically we have all of our video education back here. That's like an example of our understanding credit. Each video is about 8 minutes long. Each section depends. It's 30 to an hour. If you watch the whole thing start to finish, it's about 7.5 hours. Just so you know, so it gets integrated in. Some of it's self-study, some of it's in class. That's how it's usually done. These are all the topics. I'm not going to go into them all with you. And we have many other tools back here. One thing we do is we have a tool back here called our debt crusher. And check this out for a second. So this is where a student would basically be able to see their debt and actually start to understand what it looks like to eliminate their debt. It's one of the tools, and this is individual to them. Again, we're not tracking this data at all. Your administrators are not able to see this sort of data, right? So if credit card debt, they would just enter it, they hit plus, they put that in. On a $10,000 credit card balance, do you know with a $167 minimum payment, a 20% interest rate, so $10,000 card, $167 monthly payment, 20% interest rate. Do you know how long it would take to pay that off? Does anyone know? Want to guess? Okay. So we show them. So it's actually it's actually like, right here. So it shows them their debt-free date. It's actually like 90, like over 80 years. This is how much interest they would actually be paying right here on that debt, right? So Visa didn't used to have to tell people this. They do now, but it's like I printed it recently to see where it's buried, and it's like on page 5 at the bottom in micro, like, you know, font, right? So that's, you know, students should know this, right? So what happens if you were to start adding an additional, so what if you start adding an additional payment, even if it's $50, you'd be amazed, like $50 a month, even if it's $20 a month, it literally shaves like 60, 70, 80 years off the payment. And the interest rate, they're able to see how much it would go down, right? In this course, so as they're following along the videos, they start here, they finish here, depending on what courses you want included, right? We can customize it. There's an over 400 page, or I think now it's like 387 page workbook that goes deeper on everything. It's not just us teaching it. So it's us, and we have many presenters that teach it, but we also went around Canada and we interviewed experts, like the best minds. Like, so we have like guys like Jim Treliving in here as an example, Kelly Keane, who's a really well-known author. She has like 7 books on financial education. Lori Campbell, they're a charity that helps people eliminate debt. So we have all these different experts. We're not politically bent. Kevin might be, but I'm not. Like we're not as a company. We interviewed Stephen Harper recently, exclusive enriched interview. So he's in there teaching your students his thoughts around money management, right? So it's pretty cool. It's dynamic. You guys are going to get great feedback. We'd love a chance to talk to you if you haven't met us before. There are these forms on your table. Guys, they look like this. You can see if you flip it over, if you're interested, I know there's some of you who are already clients in the room, but if you're interested to talk to us about it, and we would love to give you a free access, try us out. Have whoever's your best mind on content, please challenge us. Go through it. Like, I want to hear what they think, and I think they'll like it, right? And you're going to see the application. So if you're interested in this, please fill this out and just see us at the break or at some point in the next couple of days. We'll be around and look forward to meeting all of you. I don't know nearly enough of you guys, and just wanted to thank you again, Dennis, for this shot to be up here. We really, really appreciate it. Yeah. Thank you.